So portfolio update time, and if you guys have been paying any attention to 2023, you would know that the past 2 years have been a crazy ride in the stock market. And this has been no different over the past month, with US CPI numbers coming down lower than expected. However, that's not having any meaningful effect on the stock market. The interest rates worldwide have increased another few basis points, and the UK economy lies in threads. So how has my free trade portfolio fared over the past month? So let's get straight into the portfolio. So as you can see, the value of my general investment account currently stands at £10,523, and I haven't in the past few months put any deposits into my Freetrade account. The reason being is that I have an ISA with Freetrade that I might keep, even though that their fees have gone up to $11.99 per month. I don't actually think it's worth too much paying for the annual subscription because it makes you committed for 1 whole year. Also, it's just £2 extra per month, which you can kind of put into a high interest bank account anyway and kind of negate that extra cost. So going forward, I might be selling off all my holdings in my Freetrade account and moving my general investment account, which is very easy to do, and then maybe my ISA to a different provider. However, I'm still undecided on that. But even that being said, most of my holdings within my general investment account are very much in the negative, and I'm going to show you that in this video. But within the max period, it says that it's down by £2,111. This is not taking into consideration the 2 companies that have been kind of sold out because of either bankruptcy or going private. So really this number is more down maybe 3,500-ish, and I will show you how much losses I have been making in this portfolio, and this portfolio update is pretty much an ongoing joke. So first of all, Intel is down by around 50% in my portfolio. I only have 0.1 shares of that, so it's not really a lot. However, let's go into see how Intel has been performing over the past few months. So over the past month, we can see that Intel has been kind of going downhill with a bit of an increase. Now this could be due to a lot of things. First of all, of course, the economy is not doing too well in terms of interest rates going up. There are lots of fears that more banks will actually go under, just like Silicon Valley Bank. In addition to that, Intel have been making a lot of changes to their lineup, with talks that things like the Core I processor line is going to be replaced by something else. So the future of Intel is very much up for grabs. They're going to make huge changes within the company, and investors aren't really sure where it's going to go. We can see from the analyst rating of Freetrade that most of these analysts aren't really that favorable towards Intel in the long run. We can see that 24% are unfavorable, with 59% not saying either way. So the higher tier projections are that Intel could reach $45, which actually would be incredibly good because it's trading at 29. I don't really take these analyst ratings for what they are because there's no such thing as an analyst that will know where the future of the company is going. But I don't really think that Intel is a company that I will be investing anytime soon, just because it is very uncertain and the volatility is a bit too much for me. The next is CSN, and I have 1.7 shares of that, and that is down by 40%. So over the past month, CSN, also a steel company, is not doing too well. However, again, I only have 1.7 shares, around £5 in worth, so I'm not really too worried about that. The next is Gap, which over the past month has been doing really badly, and that is down by 41% in my portfolio. But then again, I only have 1.34 shares, so I'm not too worried about that either. So Xinhuan Real Estate is a company that is doing ever so poorly since I have invested into it. As you can see, it is down by a massive 87%. However, I still haven't put in that much money, around £110 into this. So this is definitely not a company that I'm going to be investing a lot. The reason why I did start investing in this company is because it had a very high dividend yield, and I invested in this company, if you would call that investing at all, over 2 years ago when I had no idea how to invest. This is also why I made this channel. It had around a dividend yield of 21%, and I thought if I put in £100, I'll probably get £20 a year. But that, of course, as we know now, is not how dividends work. A very high dividend yield often actually indicates that the dividends will be cut in the future, or that the company is not performing in the way that it wants to, and it's attracting shareholders through the high dividend yield and then trapping them in there, and the stock price falls down. This is called a dividend trap, and please try to avoid that as much as you can. Next is Kyndryl, and this company is always going to stay steady. I don't want to explain it again, but yeah, I'm not really too worried about this. It was a free stock, but the value is £19, and I have no idea how it's moved over the past month. Yeah, it's basically gone in a straight line, a bit down. I have Saturno Al Kauthar Global something, which is, I think, is an ETF, and I've invested around £65 in this, and this is down by 10%. I'm not too worried about this. First of all, because it is an ETF, and also because I didn't put too much money into that. So the next one is my first big worrying one, and as you can see, over the past month, it has gone up by about 20%, which is really good. However, if you look at the actual statistics behind it, this company is actually down in my portfolio by 93%, which is a total of $1,162, which is of course a lot of money, and it is sucky, if that's even a word, to see that in my portfolio. And I think going forward, this company might actually go bankrupt. This can be my second company that I've invested around over $1,000 in that's gone to bankruptcy, and yeah, it's not doing really well. However, it has rallied over the past month, month. This is because if the share price stays below $1 for a prolonged period of time, the actual shares become delisted, and I think this company is trying to prevent that from happening. So take that for what it is. Don't invest in this company. I wouldn't recommend it. I haven't actually looked into the specifics of this company, which is the reason why, you know, I'm suffering from such a big loss, but that is what it is. Next is ESG Global ETF. Again, another random ETF that I put around 70-60 pounds into it. That is down by 5%, which is not too bad at all actually. And actually this ETF tracks the performance of the FTSE Global All Cap Choice Index. I'm not sure what that is, but I think it's looking at dividend yield, but the dividend yield is not too high at 1.18%. Anyway, I've invested into this over the past month. It has gone a bit up and down, up and down. We can see as a maximum, it had a high of 423 and now 374. So I don't know if you want to invest into this, maybe look into it, but I do definitely think there are better ETFs to invest in than this. Next is Aston Martin, and I have 41 shares of this, and this company is down by 90% in my portfolio. So this is a huge loss at 750 pounds. Obviously, I'm not too happy about this. I don't know what's happening with Aston Martin. And as you can see over the past month, it had a high of around 247 and now it's back down to around £2. We're not doing too good. Aston Martin is a company that I really like because of the products that they make, which is why I invest into them. I really like Aston Martin cars. Of course, I don't have any, but I really do like their design, and I do think that they're going to be around for the coming few decades. But again, their share price is pretty low. CrowdStrike is also down a lot in my portfolio, given that it is a very big company, and I do think this is a stable company that will survive. However, it's down by 34.25%, so that's a £54 loss. In terms of dollar, that's around minus 38%. But this was a free share because a couple of years ago I put in money into my ISA and then they gave this as a reward. But yeah, over the past month it did dip and then now it's going back. However, if you're going to the maximum of CrowdStrike, it used to trade around $280 in the overly valued pandemic era. So Cognite Software is another one that is bothering me a lot because it's down by 84% in dollars, so that's over $1,000. As you can see, these losses really do add up to my portfolio and they kind of drag down my overall returns. My goal with any of my portfolios is to maximize my money. However, these decisions were made a long time ago, as you can see, 1st of September 2021, when I was none the wiser, and I'm kind of making up for these mistakes. And as you'll see with my ISA, I do make up a lot of these mistakes with my new strategy, which I don't recommend, but it is one that I have adopted and I'm already happy with the returns I've gotten, even this tax year or even this overall year. Cognite Software, massive loss, and over the past month it's kind of gone down more. So AGM Holdings, another company which I am in a huge loss, that's minus 83%, so another $1,000. The losses add up to many thousands of dollars, and this money I could have just bought something for myself, maybe gone on a nice holiday, learned more skills. So it's not all about just investing everything into something. Sometimes you could better use that money on developing skills that will actually give you better returns on your investment in terms of better employability, better relationships and friendships and things like that. Fastly is also down by a huge amount. This is getting quite sad again. I don't actually look at this portfolio too much because a lot of these companies are very much in the red and a lot of these companies will go bankrupt. So it's not very fun for me to look at these. However, Fastly is down by minus 78% in dollars, so that's nearly $1,000 loss as well. The analysts aren't too favorable on Fastly either, so we'll have to see where that goes in the future. As you can see, Fastly was trading during the pandemic times very much overvalued at $120-ish. We have next Albert Mineral, which trades at 0.001 pence, and this is down by 61%, and I have 345,000 shares in this, and that's down by £576. Kind of wish I didn't buy it, but you never know with these mineral and mining companies that their value might just go up. For example, if this went up to £1, I would actually be a millionaire. So let's see what happens by holding these stocks. Alibaba also not doing well at all. Over the past month, you can see a huge drop off from $96 to around $85 now. This is a great example of how dollar cost averaging would do you really well if you did it every week. For example, you buy it at 96 and then it drops at 88 and you buy it, and then it drops at 82 and you buy it, and then it drops at 81 you buy it, and then you can see it goes up. So actually dollar cost averaging, a very viable strategy. And I'm not saying to split up your money and do it weekly, but you can see over many years when dollar cost averaging, as you can see, like a company like this, dollar cost averaging will be a massive help because you're buying at all these dips and then highs. Then again, the longevity of this company is still unknown, so I wouldn't recommend just DCAing in everything. However, maybe something like a good global ETF, dollar cost averaging in that, I think is a really good approach to investing personally. So anyway, Alibaba is down by minus 62%, and that's an $855 loss. Metro Bank not doing well. As you can see, it was doing really well until the whole Silicon Valley Bank thing, and over the past month it has just been tanking. That is down by 30% in my portfolio, so that's £240. I am not actually too worried about Metro Bank because I do think it's going to be around for the next maybe 10-20 years, and and I'm quite happy to just hold on to that, and then we'll sell it at a profit and then just keep buying ETFs. Next we have Corsair. So as you can see, over the past month, Corsair did do a very nice jump. Not too sure what this relates to, but I think that the global market in terms of gaming and handhelds are going to boom in the next couple years. I really do think this is as a prediction because of things like the Steam Deck and the new ROG Ally. If you know about that, you know about that. But there's a big push into miniaturizing these graphics processing powers into smaller packages and then, you know, selling them as handhelds, reducing the price of that. And I do 100% believe that any company that is within this space, such as AMD, maybe even possibly Nvidia, are going to really benefit from this boom of handheld gaming PCs. And I think even going in the future, I think these handheld gaming PCs will actually just end up just defeating consoles, because what's the point of buying a PS5 which gets old after like 2 years for so much when you can just buy a handheld console and play with your friends wherever. I do think that, and I don't know if Corsair is actually directly going into that space, which they probably aren't directly, but you know, I think the video game industry in the next few years, maybe even 3 years, is going to really boom. So I think that's where the money would be going. But anyway, Corsair is down by 42%, and that is a $583 loss. Next we have Baidu, which over the past month also is tanking, and that is a loss of 35% in my account and a loss of $432. Of course, this whole portfolio is very much loss. I am going to keep Baidu for the long term. I do think that unless something happens between China and USA, fingers crossed it does not, Baidu is a company that will be seeing growth if these relationships continue. As you can see, analyst ratings for the first time, 86% favorable, no price targets, but I really do think Baidu, I will be making my money back on that. And lastly, I have Shoals, which is a solar company. Over the past month, it has been doing really good. I am still yet to get profit for this. I should have a few months ago actually sold it when I was near profit into that. But anyway, I'm going to hold this for the coming future, and that is down by minus 33% in my portfolio. So that's a $420 loss. If I go into my account details, you can see that I have also cash. I have 6,322 in cash. This is because I had ETFs and I sold out of them because I thought it was the right time, and luckily I did because the price has gone down. So I'm going to end up buying it again, probably Monday or sometime in the next week. So as you can see, I sold the S&P 500 at 707 and I did buy it for 698, and I do think that it's going to go down below 7. But again, timing the market is something that I definitely do not recommend, and it's something that I do because it's fun for me, and honestly I don't need money in the same way as a lot of other people do. Don't recommend it, but that is what I have done, and that is why I have that amount of cash. If I go into insights, so over the past month, as you can see, compared to the FTSE All World ETF, I have been losing money. This is because the majority of my general investment account is random stocks picked, and they have been underperforming. Not very surprised at all. Now let's go into the ISA and see how my strategy for my ISA has paid off way more than what I've done in my general investment account. Most of these being, actually all of them being stuff that I bought back in 2021 when I was none the wiser, and there wasn't a channel like this that helps people. So as you can see, I'm very happy with my ISA. Can you see? It has a balance of £50,204, and this is 2 years worth of maximizing deposits. So if you do the math, very easy, £40,000. But I have a return of £10,204. So £10,200 is around a 25% rate of return over 2 years, and those 2 years were one of the worst years in the stock market. This is why I believe in my strategy for now. It's very hard to know when to stop this strategy, but I as an individual do think that there is money to be made during volatility. Volatility is something that I love to see. I love to see the price of something going down after buying them. This is why in this portfolio I only really invest in ETFs. I'm going to quickly go through the holdings that aren't ETFs, and then I'm going to show you what I did to get the return, and then we're going to look at that in a bit more detail. So Alba Mineral, I'm not going to go into too much into it. I have 2,403 shares, and that is down by 57%. Not too great. Mast Energy, honestly don't know what's happening to that. Might go bankrupt, but that is down by 92%. But that was only a holding of £60, so I guess I am willing to lose that. Amazon, for some reason I have the smallest amount of shares. That is up by 28%. I'm not going to really invest in any more companies in this ISA. Rolls-Royce is up by 117%, and I have 21 shares in that. Aston Martin, for fun, I bought the same amount that I had in my general investment account, but at a much lower point of value, and that is up by 36%. And as you know, the past month it wasn't too good for it either. Disney Disney, last holding I have 3 shares, and that is down by a big 30%. I wasn't expecting that. So that's down by around $137. So anyway, you might be wondering, there are no ETFs. What on earth are you talking about? Well, if I go into my account, you can see that I have total cash 49,822. So the majority of my holdings within the ISA currently are in cash, and I'm very glad that I did that, because again, I sold the GSPX at 707 and right now it is 702, so I could just go back and buy it. In my humble opinion, the GSPX is probably the easiest way to, if you know what you're doing and if you're lucky and all that kind of stuff, to make money, because look at how volatile it is over the past month. It's almost guaranteed at this point, as a joke, that if wherever you buy it, it will drop, and whenever it drops, it will go up. So take that for what it is. If I were to predict, I would actually say, I mean, I could be 100% wrong and I'm completely up to that, but I think there's going to be another correction very, very soon, which could probably go down to 678. But again, I am not a fortune teller, and please don't do this to your money. In my defense, I do think that no matter where you buy it, this is an ETF and this is the top 500 companies in the US. And no matter where you buy it, you're going to, as a long term, be making some wealth over that. So even if you buy it somewhere here, it is possibly in the future going to go up higher. So there's not really a risk of losing money, there's just risk of losing potential money. So yes, I have been buying a lot of this. So as you can see, I've got my limit buys for 701, which I'm actually going to show you how it's done, because I have realized I have a bit of free cash. So you just press buy, but I think you might need the plus version of Freetrade to actually do this. But anyway, what you do is press here and then go into limit order, and I want to be buying 701. Hopefully it reaches 701 and we can buy it, and I want to put in everything. We're not going to be able to buy fractional shares with this, but it's going to buy the nearest whole number. As you can see, 322.46, which is very, very close. Put my fingerprint in, and yeah, so next week, if the price goes to 701, which I think it might even go lower, I'm going to buy at 701 and I'm probably going to end up selling at 711 or something like that. That makes me something like £1,000 quite easily, so I'm not too unhappy about that. So like I said, insights, over the past month I have beat the market by 2%. However, if we go into maximum, as you can see, money weighted rate of return is 38%. But also make sure to check out some of my other videos, and I will see you in the next video.